welcome back to another video. Do you like my shades? I kind of look like, I keep telling people I look like Elton John, but I'm loving this hue, so I'm just gonna leave them on for the video. I'm about to go for a run, so apologize for the informal attire and ridiculous sunglasses. I've been rocking these all day, and like I said, they're brand new, so I was like, you know what? I'm gonna roll with this. So apologize for the inappropriate attire, I guess. This is how things go sometimes, you know, you just get busy. I'm just finishing off work right now, but check this out on my screen right now. Trump claims the Iran war is actually settled. This is like the fourth or fifth deal that is essentially days away from being signed, and the market is reacting off of this. But I want to show you something in the S&P 500. This is interesting, and I think this is total bullshit. This doesn't make any sense whatsoever. All of a sudden, there's another deal about to be signed with Iran, and I was thinking to myself, the S&P 500, this is setting up in a head and shoulders pattern. I've been watching this head and shoulders pattern for the last week or something like that. I said, here's the head, we're gonna start to decline, and yeah, I look like we were getting this brutal sell-off, but then today, all of a sudden, conveniently, there's a deal. There's a deal on the table with Iran, and then the market reacts, of course. So I was thinking to myself, what is going to cause the S&P 500 to rally 3.25% in the coming days? And a deal with Iran, or a potential deal with Iran dangled in front of everybody's face, that would definitely do it. And then in a couple days, probably next week, when we don't get a deal with Iran, then we're probably going to get that sell-off that we were essentially starting right here. I thought, oh my goodness, this head and shoulders pattern, maybe this is getting negated, but I just needed to wait an extra day. And then, of course, here's the neckline on the head and shoulders pattern right here. We really needed that fake deal that's supposed to get signed with Iran. We really needed that to get us back up to test this support line. This is a resistance zone right here. And we needed to tap this in order for that to complete the head and shoulders pattern. And then where does this head and shoulders pattern actually take us? Well, we can actually measure this out, and I can show you why I have the price target that I do right now. So basically, you're going to take the top of the head, bring it down to the neckline, something like that. And then if we break the neckline, which would be about like here, then what you could see is I have actually a price target of about $6,600 or $6,700 on the S&P 500. And why would we get down there? Well, we actually have a gap right here that we started when this whole crazy market run up was just getting started, right? And what's crazy about this is gaps usually get filled. What do I mean by that? So whenever you see a chart gap up like this, what ends up happening is you get that initial run up. If a gap is happening at the beginning of like a run, then you generally going to see a nice little run up happen. But eventually you're going to come back down, and you are going to retest into this area where you initially gapped up. Now there's a support line right at 65.30. So we can expect a little bit of a bounce here. We could actually expect a little bit of a bounce at around 7,100. There's a small bit of support right around here. So you could have multiple bounces. It's not going to be like a straight shot down to, 7,600 or 7,500 or 6530, 6600, 6700 or anything like that. It's not going to be a straight shot down. We're going to have bounces along the way. But what's crazy about this whole chart is now, since we are creating that neckline and we're probably going to attack this resistance point, which will probably fail, and then if it does, then you have it's just as clear as day. You have a price target on the S&P 500 to fill that gap. It's going to be about $6,700 or so, and that is a significant decline from the top of this resistance point. Like from where we are, let me get rid of some of the things on the chart here. From where we are right here to about 6,700 or so, that's a 10% decline. And that's very, very normal. This happens all the time in markets. And especially, you know, around the summertime, you know, sell in May, go away type of thing. This makes total sense. It's actually amazing to see, you know, the market just like start to tank, and then Donald Trump makes the announcement, oh, we got a potential deal with Iran, and then you're starting to create the head, the right shoulder on the head and shoulders pattern. It's unbelievable to actually witness this and chart it out. And then I was thinking to myself, like, what would cause the gap to get filled? So like if we had a break of like the neckline right about like up here, where would that price target be? And it's like right above the gap, which is unbelievable to think about. Like, so if you break the neckline somewhere around here, and we already have these points, like the neckline is in place now. All we're waiting for is this right shoulder to kind of form out. And you have the neckline, like this is the neckline. You could tell when it's going to break. It's going to be somewhere around here, in this zone. This points toward that 200-day moving average, but really what it points towards is this gap getting filled. Unbelievable. And what I was also thinking about on the S&P 500, like we were declining here, and I was like, oh, maybe we won't get the right shoulder. Okay, maybe this is not a head and shoulders pattern. But I mean, the price right here was pointing to 7,100, right? It's not that far of a move downward from here, excuse me. So that's a 2% decline. That's pretty, that was happening. Like, and I was thinking to myself, what's so crazy about this is if we move down to 7,100 on the S&P 500, then your year-to-date performance is just 1.69%, which is insane because right now we just announced the inflation data in the US. It just came out. We're talking over 4% inflation in the US in 2026, which is crazy to think. That's way above the normal 2% target. But it's also, what that also means is right now, if you are an S&P 500 holder, then your return on your year-to-date performance right now is about 1% on the S&P 500. And on top of that, the S&P 500 is like near all-time highs. And on top of that, valuations are insane. And on top of that, the S&P 500 has never been this concentrated in a basket of like the top 40 AI stocks. Like the market risk right now is so, it's really, really nuts. Like it legitimately does not make any sense to be a holder of the S&P 500 at these levels right now. But the market's going to rally 3%. We're going to test this resistance point. We're going to create that shoulder, and we will know, are we going to break up into all-time highs next week? And what's really crazy is we will know whether or not we are going to fill this gap next week, because we will get rejected off of this resistance point, or we will break above and then we can make an all-time high. This market, in order to flip back bullish on the S&P 500, you need to break above $7,611 and stay there and actually move further than that. I don't think this is going to happen. I've already been kind of shuffling my portfolio around. We're going to play this little bounce here for the next couple days. SpaceX IPO is happening, I guess, on Friday, or if you're watching this, I guess maybe I'll upload this like first thing in the morning on Friday. SpaceX IPO is happening today, and we are going to see what the market is going to do. And as of right now, the head and shoulders pattern is already telling you that $6,700 per share is going to happen on the S&P 500. It's as clear as day. If we do not immediately break up to all-time highs, then we got to look out below. That's a 10% drop. Even if a real deal is signed with Iran, I think the markets could still decline, because currently the market is actually pricing all that in. And you could see that based off of the price of WTI and the reaction of WTI right now. Like, this is actually kind of crazy. Just off of this, like, announcement of Donald Trump saying that, we're deals away. This has been like the 5th time that he said this. Oil is actually declining. What is this? I think this is like a 5% drop on the day, 6% drop on the day as of recording this right now. So I'm recording this Thursday at 5:19 p.m. here. So if the price changes by the morning, then forgive me there. But WTI, it's like already pricing in a deal with Iran. The S&P 500 already pricing in a deal with Iran. I guess what could actually happen with a deal with Iran is, I'm not predicting this, but I'm just making this point because the market's already pricing this in so much. I could see a deal with Iran happening, and then the price of oil actually starts to increase, and then the price of the S&P 500 starts to decrease, which is just craziness. Like, it's actually wild how much the market is moving off of like just these little announcements that we've seen before in the past little while already. Like, if we just look at some of the soft commodities, like corn right now, corn was just falling off a cliff. It didn't, like, 6 strikes happened with Iran yesterday, and the price of corn and the price of wheat, like, it's just declining, and alongside the price of WTI as well. Let's look at wheat. This is the fund that I was actually following. Like, we already got a slam through this resistance point. This is actually a bear flag. This is what I was looking at here today. This is a bear flag. This is signaling lower lows coming. But like I said, if a deal with Iran is already priced in, what's going to end up happening when a real deal actually comes about? Honestly, I have no idea. Let me see what other we were following. Cane as well. Let's just take a look at cane, another soft commodity another soft commodity that I was kind of interested in. But like I said, I'm thinking more about like this area as like an entry point right now, and we're just following. And we're actually getting that 50-day cross the 200-day moving average. That's a bearish signal. So I mean, I've been saying that, look out for 904, and then I might be interested as an entry point. But like, look at this this commodity, or I guess commodity fund, is looking like it's formed a huge wedge pattern. And we were playing off of it right here. We were playing it off of it right here. That was acting a little bit of resistance there. So once this breaks out, then, there's going to be an interesting move. And especially once we get back to 904, that's going to be very interesting right now as well. One of the things that I wanted to look at was SOX. So this is the semiconductor index. One of the things that I thought was so interesting today, we're seeing a 7% rise in SOX, but this makes total sense as well, because it would make sense for us to break down below not only like this point right here. This is $13,171. It would make sense to actually retest this as a level and then pull back from there. This would make total sense. I've been saying this for a little bit of time. The SOX ETF, this is looking like it's going to pull back to 10,530. That is a level to watch right here. There's a neckline on the head and shoulders pattern that's actually playing out perfectly as well. This makes total sense. I'm not stressed about like the SOX index being up 7% today. Huge move on the day, But this is an opportunity for sure. So if this is anywhere near this in the morning, I'll probably be adding to the inverse position. And even if we get up like around here, like 13,500, somewhere around here, like if we start to rally up there, then this is an obvious short position that you could take. And this chart is just screaming that it wants to pull back to, at a bare minimum, 10,000, let's call it 11,000 on the chart here, but really that 10,530 kind of level, that's where this is pointing to. And then if we do get a bounce somewhere around here, like we were following this little channel right here, if we do get a bounce somewhere around here, then you could just look to play this inverse once we create that right shoulder. And basically, you could rally anywhere, something like this. You could rally somewhere around here, be kind of at the same level of this as this left shoulder. This would all make total sense. And then the final price target is by using the head and shoulders. You measure from the top of the head down to, I guess it would be the neckline, which is right here. And then wherever you break that neckline, it's going to be, oh my gosh. That's crazy. So I would call 8,468 as like a good point where you would expect another bounce off of that there. So this is just madness. Imagine if it played out something like this, like you get a little bit of a pullback, a pull up right around here, get that touch back to where you kind of form that channel, get a little pop, there's the right shoulder, get a little pop right here, and then break into this channel, and then you'd have essentially two areas of support where you'd be ready for another bounce. But that would of course be in the short term, and that would assume a lot of things that are going to happen on this chart here. We're going to watch it. We're playing to the inverse, where we've been inverse for a couple days here, able to actually catch this huge decline and then buy back in right near the highs here. This is just really, really crazy price action. This to me signals a bubble. And if you look at some of the key indicators, like let's put like relative strength on here. Like relative strength falling off a freaking cliff. Like, look at this. This is crazy. I didn't take a look at this the past like 2 or so days because I was just like saying, I stopped paying attention once we started to trade around here. Any kind of pop could just be ignored. Look at that relative strength. It's coming down like this. This is negative divergence. This is what they call this, when the RSI and the MACD is going lower, but the stock is essentially trading sideways or even trading upward. And we're getting both the RSI and the MACD both trading lower. That to me signals big money is moving out of SOX and rotating into some of the safe dividend plays. We've been following XLP. This is the consumer staples stock. I'm actually in this trade right now. Entered right around this area right here. And we're in the money on this one. This one's fantastic. Been on a nice little, I was kind of like, oh, where should we think about trimming? And you got this like little parallel, so maybe after a 5% move, this might be a good play there, but really you're just going to trade in this parallel for a period of time, and eventually you're probably going to push towards this upward, like the 90.13 kind of level. That would be former highs right around this area, and the MACD is showing actually just neutral, so it's not oversold, it's not overbought. We are getting an increase in relative strength right here, and you're getting that push upward right there. So not signaling overbought. This actually looks like a very, very good RSI where we've got strength behind this. This tells me that big money is rotating out of SOX into consumer staples. And we've been talking about this for the last like two weeks or something like that. So really amazing to see this all play out. I'm gonna go for a run. I've been like literally sitting on my computer all day here. This is getting kind of crazy. So if you enjoyed this video, let me know. Hit the like button below. Hit my Substack down in the description. Join me over there. There's a free tier, and then there's the $9 a month subscription. This is $9 Canadian, by the way, so a lot cheaper if you're in US. But if you're in Canada, you're looking to make some moves in terms of like swing trades. That's what we do over on Substack there. And we've been doing very, very well in 2026. Not been perfect. Like I said, I try and let people know not every trade is a winning trade. And, but over time, we've been very positive on the year. We're still in double-digit returns on the year, which is fantastic. And I think we're going to do a lot better in the second half as well, because, we're going to get a conclusion to this market top, and then we're going to see a clear direction in the S&P 500, like I talked about there. And we will make a lot of money on the downside. We've made a lot of money shorting the semiconductors already. Took a 12% gain just the other day when, we had that crazy up and down movement. Unbelievable, really. So we're in great shape. Join me over on Substack. Use the links in the description. Thanks so much for watching, and I will see you in the next one.